All right, everyone, welcome back to the channel. And in this video, I wanted to kind of make a video about the number one thing that when I learned it, everything started to sort of click in trading. This is kind of like the secret key that you've all been looking for, although that's not really something that's present in the Forex industry. This right here will solve, I would say, well over 80% of your problems with direction and directional bias, whether that's for the weeks upcoming or the days upcoming or just the hours upcoming. This is going to solve all of your questions with directional bias. And when I learned this, it was pretty much a straight slope from there. It wasn't long after that I was, eventually able to pass a prop firm challenge and be profitable and start making some real money in this market. So we all understand that the market moves something like this. Okay. This is what we call external structure. Okay. We're putting in lower lows and higher lows. Okay. We have lower high, lower low, lower high, lower low, lower high, lower low. And what we would be expecting is something like this to happen. Put in a lower high and a new lower low. And that is our expectation if we are in a bearish trending market. Okay. So we're trending bearish, and what you look for is an internal structural realignment. So take this for the weekly as example. Right now, we'll call this whole entire diagram weekly structure. And on the daily, it's going to look something like this. Okay, we'll be bullish on the daily, making higher highs and higher lows. And then eventually we'll get that internal structure realignment, and then we'll start to continue down and make lower lows and lower highs. Okay, so what you're waiting for is that internal structure. Okay, and as we start this pullback and start to come up into premium pricing, which we can use our little handy fib tool for, when we are on a lower time frame and we're looking at internal structure, all we're looking for is for price to come up to premium pricing, which is anything above the equilibrium or the 50% level, and give us an internal structure realignment so that we can continue down. And this is ultimately how price moves. So let's take it a further step back. Let's take a step back and let's just look at, per se, one or two bearish pushes. Okay, so here is our structure, and this is what it's going to look like from an internal range perspective. Okay, we're making higher highs, higher lows, and then we get an internal structure realignment. Now we're back to making lower lows and lower highs, and then we get that internal structure realignment. Okay, higher highs, higher lows, and then we get that internal structure realignment. And this is what you're looking for on your lower time frames. Okay, so we have external market structure and we have internal market structure. This is what the internal looks like, and this is what the external looks like. So even though we can be bullish on the internal structure, we can maybe be making higher highs and higher lows. Obviously, sells are more probable because the external structure says that price moves like this. Okay, and we're going to dive into the charts so that we can break this down a little bit further. It's important to note that you're looking for that internal structure shift when you get up into premium pricing and proper pricing. So this would be proper pricing when you are in a downtrend. Proper pricing when you are in an uptrend would look something like this. Okay, and obviously you want to be buying in discount. Okay, you're looking for that internal realignment in discount. Right here, we're making higher highs, higher lows. We get the internal realignment, lower lows, lower highs, internal realignment. And now we are back to higher highs and higher lows. And you would be buying from obviously demand levels. And what you're going to look to buy is from a supply level sitting up here. And we're going to take a look at a textbook example of this. Okay, so an internal realignment inside of premium pricing with the proper external realignment or the proper external structure is what's going to give you bias for everything pretty much. So right now we're looking at the euro, as you can see up here on the weekly time frame. And just as we talked about before, you can see that we are making lower highs and lower lows. So lower low, lower high, lower low. Obviously, we'd be expecting price to come up into somewhere up here because that would be our premium level. Okay. And we have actually just tapped into it. So we can expect something like an internal range realignment like this on the daily time frame to continue down. Okay. And what we're going to be looking for obviously is a sell in the supply area. Okay. That caused the realignment. So whatever supply caused this demand to go is where you're going to be looking to trade off of. Okay, so let's give this a clear out and let's dive into, actually, let me just mark, let's just mark the weekly high and the weekly low, okay? And obviously you can see that we started to realign already. So pull our fib from the high up here to the low, and now we're on the daily. So here is where we got that internal realignment on the daily time frame. Okay, here's where we got it, and we start to pull back now. What we're looking for is something like an external or another internal realignment. We can see that we are up in premium. That's well over the 50% level. We can totally start looking for sells once we get that internal realignment. And that's exactly what we're getting right here. So once this demand goes, we can say that there is our daily realignment. And it was likely something up here in this supply that caused it. And if we want to dive down even to a smaller time frame, we can start to pick apart the charts. So what we can see right now is we have built up some inducement for the actual cause of the realignment. So here, this would be considered inducement. And we would continue to build inducement just like that. So we obviously know that there's money sitting up here. What I'm going to pull, and obviously this is easier to see in present or, in hindsight, is this area of supply sitting just above the inducement on the 1 hour. This is completely refined. I likely would not have pulled this on the 1 hour. I would have looked at something like the 4 hour and pulled this whole candle as it is. But I'm just showing you that if you do want to be very precise and you do look at external order flow, and once we get that internal realignment on the smaller time frames, then you're good to go, and you can start to continue the overall external market structure direction. So what I'll do is I'll place a limit. I'll place a limit right here and just cover a bit of spread. So it'll go just above the POI. That's good enough for me for spread right there. And obviously our first target would be the next market structure point. So this would be your 4 hour low. This would be your take profit 1. And down here is ultimately the week low that you want to take, right? This will be your take profit number 2. And let me just point out again, the external structure looks something like this. Okay, and we're expecting another bearish push because we got this daily realignment. Okay, so I'll set a limit on that POI that has inducement above it. And here would be my take profit 1. And let's just see what price does. And let's see if we tap in here. Let's pull this over. Okay, and there you see we tapped in pretty much on the dot. So tap in on the dot here, just sweeping all of this. This is all internal range liquidity. It's an IRL wipe is what we call it. And in the mentorship, we would actually go down to a smaller time frame, something like the 1 minute or the 30-second, and find an entry somewhere in here to get an even smaller stop loss and an even bigger risk to reward ratio. And if you're willing to, put in some of the work, and after, you want to watch all the course content, be a part of the community. It's the best community out there as far as I've seen. You can click the link in the description to enroll below. There is our TP1, and we can go ahead and zoom out to the 4 hour now and wait for the week low to go. And at this point, we are running 65R. Taking this low would leave us at around 75R, and that's payday. So we get a bit of a retracement here, still holding because that low is weak, and we blow right through it. So yeah, if you want to learn how to take some trades like this and how to, dive deeper into the market, understand structure the way we do, understand supply and demand with liquidity concepts and everything from chalks to flips, definitely click the link in the description. The whole purpose of the mentorship is so that it is your last stop in your trading journey. And if we can't make it your last stop, then we failed at our job, and that hasn't happened to anyone yet. And we can guarantee it won't happen to you. So please trust me. Enroll in the course if you want to be a profitable forex trader, and you won't look back. It'll be your last stop. So yeah, I will see you all in the next one.